When will the Vancouver real estate bubble burst? Is it a wave of never-ending offshore investors? Or are prices driven more by the local demand? We're going to have a look at which cities are the best and worst investments. We're going to have a look at which cities are now in a buyer's or seller's market. I'm Bill Coughlin, the Vancouver and Fraser Valley real estate market forecast, bringing you the year-to-date, the spring reports, and the 2-week sales reports. Now let's have a look at all 22 cities across the Lower Mainland. Let's see which one of these cities have been going up the most, which ones look like they're starting to stabilize. Let's have a closer look. Now first of all, let's start off with the year-to-date report. This is for March of 2014. Single-family residential detached. East Van sets a record up $175,000. Not to say that West Side and West Van didn't go up over $200,000, but only at 8.5 and 7.57%. Now, if you look here real closely, you can see that the ones that have all gone up over 10% are actually not the foreign investor market, but more of our local marketplace. This is local consumer confidence. Now let's go out to the valley here. The valley, which typically from Maple Ridge out, is a much more subdued market. 1.4%, 2.2%, barely keeping pace with inflation is North Delta and West Surrey. Remember, we've had almost no Indian money come in the last 3 years. Now, Abbotsford sets the record at 6.8%. Overall, we've ended up with a 7.3% year-to-date increase. Why do we have two home price indexes? The top part of the market represents more cash buyers. The lower half of the market represents more of the job force, the mortgage money. Now on condos, we're in the low-end condos here. Which ones have changed the most? Look at, we've got a lot of red ink here. But downtown on the and Burnaby have both gone up over 3%. If you look real closely here, you'll see that West Surrey, once again, and Chilliwack this time again, have both dropped $4,000 each at minus 2.6% and minus 3.5%. That's a $1,600 increase on the condos on the lower 50% of the marketplace. Now let's go on to the monthly report. In the Vancouver area, our inventory levels are actually down. Our sell-through rate at 26% is screaming hot. This is a very strong market. And out in the valley, Fraser Valley, Chilliwack area, we're at 20% also. This is very strong for the valley, considering we don't get that foreign investment virtually at all. We do get trickle down from the people that sell in Burnaby that move out to, say, Abbotsford or Langley. Now, here for the 2-week report, this is our pulse on the market. Look at our strength here. The sell-through rates of 35-36%. Not on what you would say is the Chinese investment market, but in the local markets. We're up 26% over last year. 27%. Very strong on our single family detached homes. Now out in the valley, you can see some strong markets here at over 20%. And if you compare that to a year ago, we're once again up dramatically. This is up 30% for the same 2-week period from a year ago. Very strong market in the valley also. Once again, remember the trickle-down effect. When someone sells, say, in West Side Vancouver and buys in Coquitlam and buys further in Abbotsford or Langley or even right out in Chilliwack in the high-end homes, that's a full trickle-down effect. I'm Bill Coughlin, signing off here. You want to order any of your Vancouver market reports? Call us directly at 778-374-3744. Bye-bye for now.